Hello there. This is James, and you're about to watch the latest episode of the Primus Live webinar series. Now, we're about to go live. The program's about to start. My watch is missing, as you can see, but we're about to start in about 3 minutes' time. I'm excited. I hope you're excited too, and I will see you soon. Hello there. This is James, and you're watching the latest episode of the Primus Live webinar series. Now, before I introduce you to my very special co-host, remember these episodes are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let me introduce you to my very special co-host. Her name is Kaya, and she is our head of investment research here at FXPRIMUS. She has worked as a portfolio and investment manager with exposure to both public and private markets. Before we were lucky to get her, she was a senior investment associate at a hedge fund in Singapore and a vice president in Bank of America, Merrill Lynch. Let's welcome Kaya. Kaya, my love, how are you today?
James, I'm doing great. How are you?
I'm not too bad. We're both working from home, as you know,
with the working from home.
Yeah, and we're sort of used to it by now. And like I say, I'm still wearing my little suit and my handkerchief, despite being at home, etc. But never mind, you know, onwards, upwards, as they say.
Very important question. Where is your cat?
Where's my cat? I've got three cats actually, and a
Okay,
dog.
so where are your cats?
There's a dog just on the sofa over there, and the cats, I don't know. They have their own mind, but they may make an appearance later.
I was just about to say, I really hope that they may make a guest appearance, because we do need a bit of fresh blood in the show. So hopefully it's either your cats or your dog.
Exactly. Well, we need somebody just as cute as you to be on screen. So one of my cats would be ideal, you know.
Impossible.
How's your day been though? You've had I know. Have you had a good day?
Day has been good. As you know, I spend most of my days looking at the charts. So I would say that coming into the second month of 2021, we see a lot of very interesting developments in the marketplace. And a few of these we're going to cover today, along with our multiple time frame analysis. So we're going to tie this whole topic into one sort of holistic bunch, and we're going to talk about different time frames, and this is again something that coming directly from you, our viewers. Quite a few of you have reached out to us and asked, how do you actually enter the trade? How do you reconcile the weekly chart with the daily chart? So this is the focus for today.
Perfect. So shall we get started?
Let's get started. Before we jump to our charts, just a quick update what's happening on the markets. So risk on sentiment is still happening, no change in that. We still see a lot of liquidity and capital flowing into all sorts of risk assets, such as Bitcoin, such as Australian dollar, such as New Zealand dollar. We're seeing quite a bit of momentum in commodities. We see copper at a 9-year high. We see oil recovering into 12-month high. And on top of other commodities, maybe such as lithium, steel, iron ore, these are all either they are 12-month high or they are their swing highs, which means that definitely reinflation trade is still on. But something that has happened, I would say the last week, but also in 2021 as a whole, although it's been more pronounced during the last 7 days, is the pickup in interest rates. So the way I shall say discounted cash flow analysis is being done, and this is the basics of equity analysis, is that you look at the risk-free rate, which tends to be US 10-year yields. And US 10-year yield has gained quite a bit. It's currently trading near let's see, where do we stand? It's near, gone from my charts, 1.4 levels, which is 12-month high once again. And the back of the interest rates getting a bit higher, we see equities under pressure, because with the discounted cash flow analysis, the net present value is lower if interest rate is higher. So very long intro, but the short summary is that we see equities under pressure. We see S&P and Nasdaq in the red for the last couple of days. We see certain sectors that are very subject and dependent on low interest rates, such as growth and technology, also in the red. Whereas sectors that actually benefit from higher interest rates, such as financials and banks, are still performing well.
Like I say, you made the point just a moment ago. We have seen a little bit of a slump in indices over the last couple of trading sessions. In particular, like I said, the Nasdaq has taken a bit of a beating. We're trading around the 3861.89 level as an indication only. So yeah, you are seeing a little bit of that. So I know we've spoken about this, and we've spoken about this in a lot of our sessions about waiting for the big bubble to burst, because we've had a massive bull run in the market for quite a while. Do you think? I mean, I think it's, I just think it's a bit of a downside. But do you think this could be the beginning of the infamous pop of the bubble we've been waiting for, or do you think this is just a bit of
I don't think so, James, and that's for a few reasons. So I think that the interest rates are currently overshooting. This is definitely not the equilibrium sort of interest rates, and there are a couple of models that help to identify that, which are quite sophisticated. But let's just put it this way, that a lot of the interest rate hikes at this point are due to inflation that's being priced in, and we have discussed inflation during our previous lives. Most likely, inflation is not going to pick up at this point yet, because we still have a huge slack in the labor force. We still have 10 million people who are underemployed or unemployed in the US. And until this gap gets covered, we're not going to see inflation. So I think at some point interest rates are going to start lowering again. Maybe they're going to find their sort of level near 1%, maybe slightly lower. And I think that's when we're going to see another all-time highs in NASDAQ as well as in S&P 500.
So this is just, at the moment, what we're seeing is a bit of a blip. So, more happy times to come, so to speak.
It is a bit of a blip, and of course, given that Jay Powell is giving testimony today and yesterday at the Congress, there's a bit of volatility at the back of that testimony as well. So a few interesting things he mentioned yesterday, such as US dollar most likely will be digitalized. So we will have digital US dollar, which doesn't mean it's the same as Bitcoin, but it just means that you're going to have, let's say, digital asset of US dollar that's backed by physical US dollar.
Yeah.
He also mentioned that volatility most likely is going to be, inflation most likely going to be volatile in 2021. And I think that's at the back of commodity prices being slightly higher, which will translate into producer prices picking up. But I also think that the companies struggle with passing on that cost onto consumers. Therefore, inflation probably will not be as high as the Fed would like it to be. And I think the last very important comment from Jay Powell yesterday was that he actually acknowledges that the monetary policy has an impact on asset prices. So this is the first time he has said that out loud, that most likely the ultra low interest rates and monetary easing has put us in a situation whereby we have 10 million people unemployed. At the same time, Bitcoin is trading, I don't even know what it is these days, 50,000. We see swing highs, we see all-time highs, while the fundamental data and economic data is actually quite weak.
Yeah.
But
interesting times ahead.
We have, just to summarize everything we've said, I guess the bottom line here is that risk assets most likely a bit under pressure for short time, and I shall say short because it will be maybe a few weeks. I don't foresee this happening for extended time periods. We still see a lot of flow into commodity producing countries. So let's say Australia, New Zealand, you're going to see definitely these two currencies performing extremely well. And we see those countries performing well that have done well with their vaccination efforts. And we're going to talk about two of these currencies today.
Yes. I've sort of guessed which one we might be talking about in particular.
Yes.
Yeah.
A big surprise for me, at least. My ego still struggles accepting that one particular currency is performing so well.
And I think those who remember we'll talk about it in a bit, but those who remembered maybe our Christmas special, there was a bet between you and Riyadi on this particular pair, and he's pretty much he's actually gone past his expectation of what he said. So anyway, we'll talk about that in a bit. So don't worry. So carry on, as they say.
So this is GBP USD, or the cable that we're talking about. Cable has been performing extremely well. Maybe our production manager can put chart up there. Okay, everybody can see, I hope. So this is the daily chart we're looking at right now. So as we can see, cable is currently trading near 1.4104745 levels, which is the swing high. Last time we saw such levels was in April 2018. And my projection back in December was actually quite gloomy, I would say. And I was looking at GDP data, which was the weakest in G7. I was looking at unemployment numbers that was 5.1%, 5%. And it's still relatively weak for the UK. And also the data points such as inflation as well as labor force participation, everything was pointing pound to be lower. However, the vaccination efforts in the UK have been absolutely outstanding. I think the latest data was 23% of population have gotten at least one dose of vaccine, which is remarkable because, population of north of 60 million people, this is, amazing progress, I would say, while as European Union still struggles with 5%. And the US is currently near 13%. So my take or my thesis is that most likely the investors are pricing in the recovery that the UK may have once the economy is going to reopen on the 21st of June.
That's when people can basically go out be allowed to go out and play again. That's the overall thing. But yeah, like I said, they are pricing in the fact that the UK have been incredibly good, actually, and efficient with their vaccinations. Certainly ahead of the Eurozone and the EU in particular. The interesting thing about this, you mentioned this earlier on about interest rates as well. One of the moves I started to notice a little bit a while back, because when the last Bank of England base rate decision, because leading up to that, there was a lot of chit chatter and rumors that they may cut rates to try and boost, because on paper the economy is in a dreadful state, as you rightfully said. So there was a lot of that rumor and chat that they may cut interest rates. But when the actual interest rate decision came out, everybody knew they weren't going to cut it there and then. It came out same as normal. But it was the MPC vote. There was no votes for a cut. There was no votes for a hike, but there were votes to remain the same. But the fact there was no votes for a cut gave the sterling a bit of a boost, saying that, okay, the UK aren't going to do any knee-jerk reaction. So I think that's also behind the fact that there is a bit of confidence in the cable. I have a great question here, actually, from a member of our audience. Is what's your biggest surprise about the performance of the sterling?
I think it's again the strength in sterling given the weak economic data. So the theory is such that if you have negative GDP growth, the most likely investors don't want to put capital in that particular country and in that particular currency, because you're going to start eroding the value of capital. So having I can't remember exactly the data, but I think it was minus 10% GDP growth. So, economy actually contracted last year. Yeah. But investors still want to put money into pound, which is quite surprising for me, because UK headwinds from Brexit, headwinds from the worst recession in 300 years, 1 million migrants leaving the UK within the last calendar year. You look at all these things and it doesn't make sense. Why would you want to put money there? But I suppose it has to be the recovery at the back of vaccination, and perhaps also a bit of hope that the politicians are going to come back with reasonable immigration policy for the UK, which may invite skilled labor to move into the UK at some point, and London. Although London has lost its trading hub status to Amsterdam, as per the latest data.
TV mini bit. I don't know. It's not over yet to the fat lady. To the fat lady sings. But
you're right, James. I mean, I agree 100% with your assessment about the vote. And if I'm not mistaken, that's this 12th of January. That was the day when we saw a huge swing in cable. It was up 1.12%. Yeah. But I guess we'll have to just wait and see how investors position themselves when it comes to Great British pound. However, looking at this particular chart, extremely bullish. And I'll just walk you through, through the way I assess and I analyze GBP USD. I mean, I do the same for every currency, but this is a great example because I find it such a lovely bullish chart. If I scroll out, let's say, and zoom out and start looking at the, at the 23rd of September bottom, this is a textbook example of a bullish momentum. So, but zooming in where we are right now. So the day as of 24th of February, which is, by the way, the Independence Day of Estonia, just mentioning it here. We are seeing, thank you so much. We are seeing a lot of price action. So the price touched 1.42, let's say 93 during intraday, which is, let's see, if I'm not mistaken, should be highest since April 2018. And the way one would start analyzing a chart is to just start drawing resistance and support levels. And the main chart should be the time frame that you are trading. So let's assume that we are traders who trade daily charts. So we make most of our decisions based on daily charts. So the way I would look at it, I would see my first resistance level would be whatever was the highest point during the day. And I'm just going to change the color to pink because I like that color. Now, the second resistance, again, personal preference. I like to choose two resistance lines at least. Since we don't have anything else to look at on the daily chart, I suppose the next best would be yesterday's high, which is slightly above I hope that this is visible on the screen, but yesterday's high was slightly above our current sort of body of the candle. So that would be my two resistance levels. Now, when I start looking at the support level, again, multiple ways how to do this. On a daily chart, I would choose this as my resistance because that's literally has two touch points on the horizontal line. So we didn't have any gap between the 2 days. So that would be support line number 1. And I'm going to change the color of this to blue to make it slightly easier to read. And then the second support, this is where things get interesting, or technical analysts will start debating. One would say, I think that the support should be here on 8-day moving average, because 8-day moving average has offered support for the price previously, and we can see price bouncing off the 8-day moving average here. We can see it here on the 12th. We can see it here. Another technical analyst might come and say, no, I think that the support line potentially is here, because that's when the price started trading on the 22nd of February. A third one might come and say, no, I think that's where the price closed on the 19th. So this is where things get a bit more subjective. I'm going to go with my preference, and I'm going to choose 8-day moving average, because for me, it seems that pound really responds well to moving averages. So these would be the analysis on the daily chart. Resistance and support in place. Next thing I'm going to check is RSI, so relative strength index. How strong is this momentum at this point? My cutoff lines, or my sort of target lines, are between 70 and 30. These may change. Some people like to use 90 and 10. So at this point, RSI is 73.9, which tells me this is overbought. So there's a lot of energy, a lot of momentum in this trend. If I'm already in the position, that's a good sign for me. Means that most likely it's going to continue. If I want to enter a trade right now, most likely not the best way, because if it's overbought, it may have a bit of a pullback at some point. So entry point, not so good. If you're already in the position and you plan to stay in for longer term, it's okay. You can use RSI being, above 70. And the same with stochastics. So stochastics basically shows where does the price currently sit within the sort of fluctuation of the price between 0 to 100. So stochastics is an oscillator indicator. So it sort of varies between 0 and 100 and shows where do we stand right now. So again, being overbought means that we are at the peak of the price cycle, and we have been overbought since 9th of February. Nothing to be surprised about. I mean, if there's a strong bullish trend, stochastics can be overbought for extended periods. So I would say, again, I wouldn't use this as a something to guide me as a single data point, but I use stochastics to complement my decision making. Meaning, like, if I already have a position and I see stochastics at 93, I would feel pretty happy, to be honest, because I have a feeling it's going to continue. If I want to enter a trade, probably, it may have a pullback at some point. And finally, moving on to ADX and then DMIs. ADX effectively shows how much energy is in the trend. And the cutoff lines, or the numerical values that people look at, they vary a bit. For me, anything above 25 shows there's moderate energy in the trend. Anything above 35 shows there's strong momentum in the trend, or it's a strong sort of force that's pushing the price forward. Anything above 50 means it's already extreme. So at this point, we're sitting at 22, which I don't consider as a weak energy, but I consider weak signal. So there's a difference between having weak signal versus something showing a low value. If data point drops below threshold, always consider this as to be weak signal. Don't take any decision, better to ignore completely. However, looking at DMI plus, which sits currently at 36.3, and DMI minus at 10.2, shows bullish momentum dominates. So momentum traders who are in the position, extremely bullish chart, I would, if I was long GBP USD, I would keep my position for the time being, or take my profit because maybe I've achieved my profit goal already.
Yeah.
This is the daily chart. Do we have any questions at this point?
Yeah. Cool. So no, can we have actually a look at, because I want to have a quick. No questions at the moment. Can we have a quick look at it at the monthly? Because as you mentioned, we are, we're around the April 2018 highs, and this is something I always tend to look at, as even if I'm doing a short-term trade. Say I'm looking at a 30-minute chart or an hourly chart or a 4-hourly chart. I will always often look back on maybe a long-term chart like a daily or a monthly to see a key area of interest. And as we can see, if we brought the chart up here, lovely here, the area of interest with the highs of around about the April 2018 we're closely at. So that would be the level I'd be keeping a very close eye at, because that was obviously the area where back in 2018 the bears took over and sold off from. So I'm not saying that obviously history always repeats itself. It does sometimes, it doesn't always. But by looking at a monthly chart, even though if I'm looking at a daily or a 30-minute, gives me an area of interest for me to keep an eye on. As you rightly said, if I'm in the trade already, then maybe I'm okay to lock in some profit, like a trailing stop, that sort of thing. But enter the market at the moment, I would double check this as an area of interest and think maybe I'll just wait to see if we possibly see a breakout, or maybe this could be a start of a reversal. So I think that's always a good way of trying to use the different time frames on charts. So, and I think, say, looking at a monthly, you can really see we are approaching the area of interest at the moment.
Yeah, very, very valid comments, and I 100% agree. I mean, generally, diagonal support lines tend to be stronger than horizontal, but nevertheless, if you talk about multiple time frame analysis, you always have to look at the longer time frame, and you have to see what were the areas of interest in the past that the price wasn't able to break. Because again, think about the psychology, think about how algorithms are being programmed. It's all based on past data. It's all based on statistical analysis. So if price wasn't able to break one particular point in the past, most likely some sort of algo has been programmed to be stopped at the same level. So things to keep in mind. Let's look at the weekly chart as well for the same, because weekly, if I'm not mistaken, was sort of offering us the same story. We're going to zoom in this part here. So, and you see again our current resistance. It's identical to the resistance that dominated back in April 2018, and we see the same for the support lines, because these were areas of interest back in 2018 as well. So, but let's say somebody who has interest in GBP USD trading also wants to look at shorter time frames. So let's open a 4-hour chart. So that's half a day chart. I'm going to zoom in to make it easier to see. And this is what we see on the 4-hour chart. So, okay, clearly the upper resistance is the same, because daily chart, 4-hour chart, they overlap. We see a bit of overlap also with the second resistance that we had here. So price is not quite at that resistance yet, but again, not too far off. And in technical analysis, we really deal with the areas of interest, as James has mentioned. It's not the exact numerical value. And if you look at the support that we had here, you see the same support is also valid for a 4-hour chart. And the same goes for the second support that we had. So again, the resistance and support, they tend to echo throughout different time frames. And the last time, sure.
I can say, well, obviously it makes sense, as you've already said, that obviously these black box solutions are based on previous price data and price movements. So it goes to show that the strength of these areas of interest, either resistance or support, would be substantial for both many different time frames. So that does make perfect sense.
And I would even say that once you see a resistance level or support level that has been in place for a longer time, and you see price breaking that, then you can expect a lot of momentum, either bullishly or bearishly, sort of following that momentum. So once a resistance level is broken, the price most likely is going to shoot. But of course, you have to always keep in mind, on the volume as well. So volume for me is this section here, but that depends on based on service provider, whichever broker you use. And I'm going to pull out 1 hour chart as well, because 1 hour chart sometimes helps me to decide the entry point, and an exit as well. So say if I have a position that's performing well, and I'm like, should I take my profit? Should I not take my profit? I like to look at the 4 hour chart and 1 hour chart, just to see where the direction is heading. Perhaps there's a bit of upside left, perhaps not. So that's just a bit of guidance and, add a bit of more color. So 1 hour looks like this. I am going to zoom in once again, and we're going to look at this section here. Okay, so the first resistance is valid. The second resistance here has been a resistance, has offered support, and is offering resistance once again on a 1 hour chart as well. And the same goes to the support line. So support that we had in place for the daily has been support on the hourly chart on 3 different occasions, even 4 different occasions. So the same logic applies. And the second support we had a bit less, but nevertheless areas of interest still are the same.
Yeah.
And looking at other indicators, so just a quick look on, let's say, DMIs, ADXs, we can see momentum is weakening on an hourly chart. So most likely the pound's going to give up some of the gains. ADX has come down, DMI is coming down, and slow stochastics now shows that we are at oversold levels. And looking at the moving averages, the price has broken 50 period moving average support, now climbing higher. And we shall see if the short-term momentum indicators, so 8 period moving average, 21-day moving average, and 34-day moving average, are they going to act as resistance going forward, or is price able to shoot through these resistance levels? Yeah. So these are very important data points to consider. For me, again, practical example, say I was long cable, say I'm almost about to take profit. Most likely I would exit the position right now because I find momentum indicators turning negative. I see that we have reached an oversold level, and I also see, I'm going to move this, that the strength is weakening in the trend.
Yeah. It's amazing what sort of, obviously, the different data. We looked at it on the daily, and we're saying, okay, there is an area of interest, but the momentum is still with the bulls, so to speak, currently as we stand. But then when you bring it down to 1 hour, for the 1 hour, it's slightly different, isn't it? We're sort of saying it's a slightly different story, where we're sort of saying, obviously, the momentum is slowing down a little bit. It could be seen more of a case, not overly a change of a trend, but more of a case of maybe some profit taking, which obviously will hit the price and push the price downwards, maybe in the current current trading session, things like that. So again, it's looking at the longer time frames to get the overall picture of something, but look at the shorter time frames to give you an idea of what might happen in the short to medium term for those who are like day traders or swing traders and things of that sort of nature, isn't it? That's basically what we're saying.
Correct. And just to make things slightly more interesting, I'm going to pull up the daily chart again, and I'm going to add Fibonacci retracement levels. I didn't want to add them earlier because I find there's quite a few colors on the charts already. So how would I use Fibonacci retracement? Again, many ways how people use that. Some people prefer longer time frames. Some people prefer shorter time frames. I like to add my retracement level to the point where the short-term trend started. And this particular case, we can see the price was moving higher and took a bit of a breather early February. So let's say 3rd, 4th. So I shall add my Fibo levels there. And let's just start from here. And we're going to go the dominant level in the current trend. So again, area of interest is around 1.411. Let's do it this way.
Yeah.
So let's see, how can we make this as easy to read as possible? Not really an easy way to do it. Actually, no, let's remove these because we have already covered the support resistance levels. Let's just see how price has reacted, people retracement levels. We can see, again, almost perfect reaction to people levels. We stopped at 24% percentage. 38 didn't offer that much support resistance.
No.
50th, not really, little bit. 62 percentage for sure. Price was not able to break through the 62 level.
Yeah.
And the same sort of goes for 79 level. Let's look at this on a 4-hour chart. Let's see what it looks like here. We see a bit of dominance. So, okay, this is the top level. Let's move to the second one. So price has reacted, or sort of has been stopped and pulled back by the 24th percentage. On the 38th, a bit of action has happened here. For the 50th, not really Fibonacci level, so I'm just going to ignore that. 38 areas of interest here.
Yeah.
Areas of interest here. So this is literally act as a support level. And the same goes for the 79%. And point being, again, Fibonacci levels also work through different time frames.
Yeah.
I suggest put the Fibo levels on the time frame that you're analyzing, for me, the daily chart, and then see how that corresponds to 4-hour, 1 hour, 1 week, and 1 month, for instance.
Yeah. See, that's exactly. I mean, obviously, we talk about gold a lot because I'm a gold bug, as you know, and with gold, I do use a daily Fibonacci retracement, and not, like I said, I'm a short-term trader anyway, and I tend to use those as big areas of interest. We discussed an area of interest last week, by the way,
yes,
if you remember.
Yes.
And yeah, it currently is holding its ground in that area. So yeah, tick to me. So yeah, that's again, that's my style. But again, not this is just because I look at it at a daily. I Fibonacci on a daily doesn't mean I'm doing a long-term trade. I look at it for an area of entry or an area of interest when I'm short-term trading. So you're absolutely right. Do we want to look at one more instrument and then maybe take some questions?
Perfect. Let's cover also US dollar, and we're going to look at DXY because that's the most quoted when it comes to dollar. And why we want to talk about dollar is because dollar is sort of inversely correlated to a lot of the risk assets. Whenever dollar is performing well, we see pressure often on commodities, we see pressure on equities. And moreover, US, as mentioned before, has done quite well with the vaccination efforts. So we also see dollar probably gaining its grounds, in the near term. So DXY, and I have a daily chart open here again. Let me just zoom that into the right view because that sometimes acts up a bit. Okay, so dollar has been in downward trend since March last year, but it has attempted to recover, and it broke the 50-day moving average resistance level in January. Sort of fell through again, sort of attempted to recover again, and now is testing again the same resistance level. 50-day moving average is something that a lot of the institutional investors keep an eye on. So 50-day, 200-day tend to be, sort of the two lines in the sand for short-term and long-term momentum. So definitely area of an interest once again. But looking at the other momentum indicators, so we see the red line is the 8-day moving average, orange line is 21-day moving average, and yellow is 34-day moving average. These all above the price means that short-term, the trend is bearish.
Yeah.
And it's not just whether the moving average is above or below the price, it's also the alignment. And we can see here, assuming that we can see here because I have to zoom in quite a bit, we can see it's stacked in the rainbow color, so red, orange, and yellow, meaning that moving averages are forming in a way that are confirming the short-term bearish momentum. If they were, dog's breakfast, a mess, I wouldn't take them as a good indicator. But the fact that they are aligned and they are stacked and they push the price lower means that short-term, most likely, dollar will be under pressure. And long-term, very obvious. 200-day moving average up here means that long-term, it's a bear market. It's a bear trend.
Yeah.
And the other indicators, RSI is neutral, sitting at 47 right now, very low. Nothing to read from there. We see stochastic being 13, which is oversold. So say if somebody had a contrarian view on dollar, and contrarian meaning doesn't like the way the moving averages are currently being stacked. Looks at stochastics only, sees 13 good entry point most likely because position is being oversold. That would be one of the data points one would use. Coming to ADX, ADX doesn't offer any quality signal because it's currently at 12, and DMI plus, DMI minus, both at 20 weak signal or low quality signal, I shall say. So these here we can just completely ignore when we talk about US dollar. We would have to look at the moving averages, and then you could add Fibonacci retracement or whatever other technical indicators one might use. So let's do the same exercise. Let's start pulling the support resistance lines. So I'm going to zoom in to make it easier to read. Again, for me, the first resistance level for sure is 8-day moving average, because clearly price has been responding to that quite well. I'm going to make this pink. And then the second one, now depending on the style, one might use that's 21-day moving average, or one might use this particular level here because we see price has been moving along this particular point. So let's just see. Try to play around a bit, see which line has more touch points when it comes to the candles.
Yeah, I mean, see, I'm drawing my little horizontal buy lines on a daily, and the two key areas of resistance I'm looking at is where I've seen obviously a lot of previous experience of a resistance, and at some point a support, because don't forget resistance support can change their roles and things like this. It's around about 90.822 is one of the key ones I'm keeping an eye on. In the immediate term, though, again, we're a support and a resistance at a level it has been. We are looking around that level about 90.39. Those are the sort of horizontal lines I'm looking at. As both as resistance, support wise, I see potential buying or previous history of buying. Again, this is on a daily around 90.014. What do you see?
I mean, same, because I'm looking at the first resistance 90.39, which is exactly what you quoted.
There you go. Hey, great minds.
Great minds think alike. And the other one I would say probably 90.50. And then again, we have mentioned this before, but 91 level on a sort of longer time frame has offered a lot of resistance and support as well. So I'm just going to put 91 here as well, because it's really critical line. Absolutely. As we mentioned before, once price breaks through 91, there's very high likelihood that we're going to continue the bullish trend. Let's do the same with support. Let's see. So support, I would do my first one most likely to this level. I'm just going to change the color again. And then the second one could be. And just to mention, I also have Bollinger Bands on this chart. So I haven't mentioned Bollinger Bands, but Bollinger Band is the sort of the shaded area here. Bollinger Bands offer extremely strong resistance and support. Once you see a price breaking lower upper Bollinger Band, again, that will trigger sort of sentiment in that particular direction. So I'm gonna do the other support at the lower Bollinger Band. So for me, it would be 90.02, which I would consider actually as 90, and then the other one 89.89 or 89.90. What do you get, James?
Exactly. I'm exactly around 90.014. That's the area of interest I'm looking at for a potential support. So absolutely on the money. So then if we were then, so this is obviously on a daily, so this again gives us our potential areas of interest. If we were then a short-term trade, if we go on to say the 4-hour chart, again, we would see again the lines we've drawn in, or the areas of interest we've drawn in on a daily exists again on a 4-hour. So
yes. So now it gets really messy, and again, I'm encouraging everyone to sort of look at the colors that I've just drafted here. So 90.39, it does have a couple of sort of touch points with the previous price movement. We see one 22nd of Feb 2 a.m. and I believe this is Limassol time zone. and a couple of other touch points earlier in February as well. And the same goes for the second that we drafted on 90.50 levels. We can see areas of interest on the 16th of February. We can see, sort of light touch on the 22nd. So the same resistance levels still apply. And support, I think support is even nicer, even more pronounced here. So we can see, entire
Definitely.
22nd trading session, 23rd early session, it was the same support level. And the longer frame, okay, the other one sort of goes earlier January. Let's just, for the sake of it, let's zoom in. Although again, if you go back too much, these areas of interest may not be valid anymore, especially when we talk about short-term trading. But you do see a bit of sort of touch points with around 89.89 levels.
Absolutely.
And then let's jump into 1 hour.
Yeah, so to go to 1 hour, because 1 hour again, you can really see again that level of support is clearly had been in play for a while. So jumping into 1 hour.
When I look at 1 hour chart, my first thing that catches my eye here is that we see 200 period moving average offering resistance to the daily chart. That's the first thing I see, and I always encourage everyone to find 50-day and 200, not to say day, sorry, I should say 50 period, 200 period moving average. These are the really, really important ones. So the first resistance we have here has acted as a support, has acted as a resistance. And previously, I think, again, we're maybe scrolling a bit too far to the past. So let's just use the other ones. On the support side, we see the same level valid, 24th of February earlier today, again earlier today, and the whole cluster here has been an area of interest.
Yeah, totally.
So, and looking at this particular dollar one, right? So what I would read from here, so we see the direction bullish on an hourly chart, and I'm just going to take a wild guess. That's because Jay Powell is at the Congress and probably has said something that has triggered bullish flows into US dollar, or somebody on the euro side, because DXY is 50% euro dominated. Either somebody said something stupid about euro, why we see this weakening. But and it's not just the moving averages that are supporting bullish price action on the hourly chart. We also see DMI plus at 28. We see ADX at 28. So the trend or the energy is picking up momentum, which is also evident on RSI that has, sort of pointing higher, and stochastic that is now at overbought levels at 85. But it seems to be stable. So just one thing probably we haven't mentioned, often enough, is that with RSI and stochastics and also with ADX, it's not just the absolute level. You have to look at the trend. Where is this particular indicator moving going forward? So looking at ADX, for instance, it has been more or less stable entire day today, which tells me that today probably it's going to be a bullish day, or whatever trend dominates, until the end, because there's a lot of energy and we see ADX being stable. If ADX was dropping, you could see energy just leaving. Investors are not pushing that much capital into that particular trend at this point.
Agreed. Brilliant. Well, that's obviously the. Oh, sorry, go on.
No, I'm just going to pull out again 1 month chart as well for DXY, because we did that for cable just for the sake of it. And we can see the sort of parabolic moves in DXY last last year. I would say it's been pretty big. We see huge moves on the since 2014 onwards. So with the dollar, hard to say where this currency is with this pair is going. I don't have any strong views. James, what are your views on US dollar?
Well, like I say, again, obviously the dollar index is obviously the battle against the basket of 6, isn't it? And as you probably said, the main one is the euro, but then you obviously have the sterling, Aussie dollar, Swiss franc in that basket too. with the performance, obviously, of the cable, which we've already talked about, the euro also. Where's the euro at the moment? It's still trading around 121.
Euro, yeah,
I mean,
2121 at the moment. Yeah. So, and again, pushed down by 50-day moving average, as we can see very nicely.
Yeah. So the euro is definitely obviously not so dramatic as obviously the sterling. The dollar, again, like I say, is I always see the dollar as a major safe haven. So when things are a little bit more scary and a bit more nervous, then it becomes a major player. I still see a little bit of weakness in the dollar index, because I think the momentum is behind the cable, the Aussie, etc., which is performing quite well as well at the moment. So yeah, I'm a little bit more on the downside with the dollar index. But again, as I always say, that is not trading advice. That's just an opinion.
That is not fair.
And at the end of the day, what do I know? If I really knew what I was doing, I'd be trading on a beach somewhere. So anyway, you know.
but I agree with your view. I mean, again, we don't see any sort of clear direction with the dollar. And for me, what's warning sign is the fact that 50-day moving average is offering such strong resistance. The price broke below once again, and I think it will be very hard to get out from this sort of downward pressure, especially because there's literally no energy left in the trend. So I agree. Unless something happens that really triggers safe haven, assets to perform well, dollar either is going to stay the same or maybe even test again these lower levels that we saw in January, which were around 89, and the lowest, I believe, what did we see here, was 89.20.
Yeah, agreed. So we need a shock to the system or something to scare the markets a little bit. Possibly.
We don't need, honestly, we don't need any more shocks. Well, I'm more than happy to float into 2021.
Oh, well, so far, not being funny, apart from the initial beginning in January, where it was quite interesting with January the 6th and things like that, the rest of it's been quite smooth. We've been, it hasn't been too dramatic so far, has it? Touch wood.
It hasn't, but I think it ties to our conversation, James, that either these huge events, they happen like all of a sudden, and they come multiple events at the same time, or we're going to start seeing this very slow directional change. And I know a lot of the market players are considering the interest rate level moving higher as this first secular trend shifting towards higher rates, higher inflation, lower equities, lower US dollar. We're yet to see. We shall see.
Exactly. We should see. Right. On that note, I think that was a really good session. We covered obviously the multiple time frames on two major instruments which are in the market news at the moment: the cable and obviously the dollar index. This little segment was based on suggestions made by you good people. So please keep your suggestions for topics coming in, because don't forget, we make these little episodes for you and for your learning. And anything of interest, area of interest, anything you're interested in or any topic you want us to cover, please let us know. We have no questions at the moment. So we have no questions at the moment, guys. So on that note, do you want to say goodbye or goodbye, etc.?
I just mentioned our upcoming sessions. So we're going to take a break next week. And after that, we're going to come back second week of March. We're going to talk about the promised correlation session. And then we're going to take another week of break. And then we're going to talk about momentum trading, which is, again, coming from you viewers. Yes. So we try to, alternate between technicals, fundamentals, but keep ideas coming. Give us feedback. What should we talk about? And more than happy to, do these sessions based on your feedback.
Absolutely. And guys, remember, ladies and gents, without you, we would have no show. So please share with us anything you're interested in talking about, learning, or for me and Kai to have a conversation about. On that note, Kai, do you want to say goodbye to the good people?
Thank you, everyone, for joining. We'll see you in 2 weeks.
Absolutely. And as I always say, remember, these little episodes are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.